Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your midday market update for Monday, the 4th of June. Did you call yet for our Market One-on-One Club coaching? It's really a wonderful service, and I think you'd get a lot out of it. So give us a call. It's a free consultation, a free call, 877-219-1482. So let's go take a look at the markets. And we got a lot of markets going on today. Obviously, a lot of pressure on the equity markets. We've got 3 stocks on the move, and the question is, which one of these stocks is actually in an uptrend? We'll be looking at that just later. Several of the sectors, only one sector is doing well today, and that's the utility sector, which is up again as people are looking for safety. But why not just be out of the market if it's not going well, or be short the market? That's the key thing. Now, looking at our tools that we have, you can see if we put our weekly trade triangles in, which is very simple to do, boom, you can see that was our last signal there on the May 8th at 1358, and we're 1268, almost 90 points away. That's on the S&P. That's not the Dow. And you can see the major signal kicked in here at 1312, and that was just on the 17th. So everybody had an opportunity to get short this market or get out of the market. And the question is, here's what I'm concerned about with this market, is we're beginning to just kind of roll over. This is just like a rolling over. And we've got our Donchian trade channels, which is this channel you see all in the market. You can see it's moving down for the first time. It takes a tremendous amount of energy. I'm not counting this section right here because that's just a little blip. This is 2 blips, and that's more important. So you're seeing this move down like this, this sector, this, I should say, this trade channel, and I think it does not augur well. We're looking for this market to move to the 1200 level, so that's our target zone, and I think that's what we're going to hold to for the moment. But generally speaking, we are negative based on a 100% reading to the downside. Both the weekly, monthly, and daily are all negative, indicating a strong downtrend. So don't get fooled into thinking that we're suddenly going to reverse and start going back up. It just isn't going to happen, in my opinion. There's too much information, and this is a bear market. Bear markets don't have to have any news at all, and they can still go down, and that's the catalyst that pushes bear markets down. So let's clear the screen, go to our next market. Next market we're going to be looking at is going to be actually we can look at the Dow very quickly, the same pattern on the Dow, same pattern on the NASDAQ. Nothing looks good right there on the long side. You want to be short these markets right now. You're looking at silver. Silver is very interesting. If you look at silver, and we talked about this last week, really you had this, this is a 7-day low, a 7-day low, a 7-day low, boom, boom, boom. Silver went nowhere. Gold was up sharply on Friday, but it didn't affect silver. So it leads me to believe we're going to see another down day, another down session, and down to that 27 level. And I would not be surprised to see this market continue lower. Hard to believe, but I think that's just the market we're in right now. People do not want to hold assets, at least this type of assets. So let's clear the screen, and there'll be people that disagree with me, but right now all of our indicators, with the exception of the daily indicator, are negative, weekly and monthly negative. So let's clear the screen and go to the big market, of course, which is gold. And gold is still in a downtrend based on our trade triangles. Here's the monthly. Move this over here. Here, the monthly and the weekly still negative. Only the daily is up. Now, look what's happened here. It's kind of interesting. Is if you look at, first of all, we had 4 months in a row down. Very, very unusual. I don't remember the last time that happened in gold. So we've had 4 monthly closes that were lower in gold. Very unusual. And I think a lot of the gold bulls have sort of said, oh my gosh, what's going on here? I mean, there's diehard people, but the reality is you have to look at these markets for what they're doing. And if we look at this market, for example, you can see quite clearly that this channel is not going up. It's actually stepping down. You can see right here, it's just stepping down. So the question is, this rally that we saw last week, this is on Friday when everybody said, wow, I have to own gold, didn't continue on Sunday, and it didn't continue today. So the question is it going to come back down to the 1600 or the 1580 level? I expect it will come down because we had a 7-day low, a 7-day low, and a 7-day low. And if you look at these 7-day lows, you have 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, and we've had 1, 2, 3, 4, 5. So you're right in that zone. I think we could see this market come down. Not to say I'm not bullish on gold longer term. It probably is going to go higher, but the reality is it's not there right now. So let's clear the screen and go to our next market. And the next market we're going to be looking at is going to be, going to be copper. Copper looks like it's had an exhaustion to the downside. We traded down as low as 325 early today. Came right back to 335. A big range for copper, but it's still lower than its opening. But this may be a low period. It's very heavily oversold. You can see right here. So I would not be surprised to see some sort of recovery, maybe even to the 340 level before it starts going down. So it has to regroup. Obviously, this rally came from an important element before back here. And this is in December of last year, right around the same level, 325. So the market rallied quite strongly for that. It's a different environment, different economy. We still have a minus 90 indicating a downward trend in this market. So next market we're looking at is going to be the crude oil market. Same pattern there, very heavily oversold. I think you can see this market sort of hovered around the 110, 105 level, and all of a sudden when it went through these levels here, the 102, the 100 level, 97, 90, we kicked in with a sell on a monthly rather, and the weekly kicked in obviously at the same time. So generally speaking, the trend is your friend. We've had a $14, $15 move in this market, and it's entitled to see a little bit of a bounce. So nonetheless, the trend is clearly down with a minus 90. We're looking for this market to trade down to the 80 level. And I don't hear anybody from the administration praising speculators for pushing the price down. And that's what you have to do. You have to say if the prices go up, there's a reason for it. If they go down, there's a reason for it. And speculators have got the finger on the pulse, much more so than the government, who really just follow as opposed to lead. So let's go to our next market. Now, don't take that as a partisan remark. It's not. I'm just saying this is true with Democrats and Republicans. So let's go to our next market. That's the Eurodollar. The Eurodollar, which made its low, reversed on Friday, closing over the 124 level, traded up as high as 124. Actually, it was as high as 125 early today. We just traded up to 125.05. We've come down a little bit from there, but nonetheless, this market's entitled. It's gone straight down from 132 really down to the 124 level. So it's entitled to a little bit of a bounce. And you can see right now we're actually in, hard to believe in this market, but the reality is we're actually back in a zone where it's overbought. So it's not to say, so I think what will happen here, we'll probably just sort of trade around there and then we'll start going down again. I think that this market is not going to reverse easily. It's going to take some time to do it. And it could be like a period like this when you get some time, maybe a couple of weeks, 3 weeks, whatever. But right now it's still in a downward trend. You can see that the trade channels are clearly down. The midpoint of the trade channels are down. Also, you've got the parabolic, these little dots you've seen here, which is a great way to look at the market. They're still going down. The price point is still below that level. So generally speaking, everything is still in a negative mode for this market against the US dollar, which isn't doing that well anyway, but it just happens to be doing better than the euro. So let's clear the screen, go to our next market. And the next market we're looking at is going to be well, that's not what I want to look at. I want to look at the, let me just see if I have this. Okay. What I'll do, I thought I had it in here, but let me put it in right now. We want to look at the CRB index, and there it is. Just click on that, and you can see just how easy it is to put these markets in your portfolio. So minus 90, still a downward trend. If you click on here, you're going to see the chart, and you can see the chart clearly. The parabolic and the trading channel, the Donchian trading channel, are still negative. So the market's moved out of that. Would not be surprised to see a little bit of a bounce, but nonetheless, this market's got 250 written on it. And if you scope it out a little bit further, you'll see what we're looking at. So it's this market could easily get down to this 250 zone, which is where it was in May and June of last year. So let's see, in 2010 rather. So let's see how this plays out, but nonetheless, it is in a downward trend. So let's go back to our portfolio, and let's look at those three markets we talked about, the R.R. Donnelley, Chesapeake Energy, and Biogen, which is in the upward trend. Well, the easy way to do that right now with our trade triangles is just to look at our trade triangles right here, and you can see Chesapeake R.R. Donnelley is a negative 90, which means that's a downward trend. where minus 70 in the Chesapeake Energy is minus 70, and Biogen's minus 60. Minus 60 is a trading range. So let's go to our ARTNA, and let's see what we've got there. Let's scope this in a little closer so we can get a real nice look at it. And you can see our ARTNA, major trend down, monthly down, weekly down, daily down, all minus 90. This little rally was probably an opportunity to go short, and we're expecting this market to continue its downward trend. I can't imagine on a fundamental basis, and I'm not a fundamental trader, but I don't know who's printing stuff anymore. It's just it's all digital as opposed to actually printed material. But the market has come down a long way. It's not to say it can't go further, but you can see the pattern. You know, trading as high as trading has 21, half price. But generally speaking, just put the monthlies in there. You can see we had a monthly kick in right here at 18.59. You can see the corresponding price right there. So 18.59 here and there. Tells you, and you see obviously the markets, you've got a tremendous return on that long-term negative position, or you get out of the position. You don't have to go short, you can just get out. So going to our next market, we're going to be looking at Chesapeake Energy. Again, this is in a bear trend. You've got this market monthly, weekly, and daily, all negative. You've had a short covering rally from the 14 to maybe the 17 area. And then what happens now? I think we'll see another test of the 14 area. I don't think this market's out of the woods yet. I think the rally was probably caused a little bit with the energy sector, seeing a little bit of a bounce, and also the fact that this market has come down, straight down from 26 down to a little less than 14, trading as low as, oh gosh, where are we? I think we got 13.30, somewhere like that. Nonetheless, this market has put in a very short-term low, and I think we'll see this market go sideways and move back down. Now, this is the market I want to show you. This is the question we posed to you: which market was in an uptrend? So if we look at this market here, we can see a couple of things. The one thing I like about this market, and I'll get this closer in, is this is how I look at the markets. And again, I recommend that you certainly have a look at it like this. But the one thing stands out, it's long-term positive aspect on the monthly from 109.14. Okay, 109.14. The market's currently trading at 129. So it's never, even with this pullback, it's never really broken that thing. Now, the one thing I'm looking at today is this day right here. This is going to be a bullish engulfing line. Okay, so what that means is the line, the body of this candle is greater than the body of the other candle. If it closes up here, great. What we look for is the next day is for it to close higher. If it closes higher, it confirms this, and you can buy this position with a stop under 126. So the stop would be 126, and you'd look for this market to go to at least to the 138 level, come up and test that again. But generally speaking, if you want to be a little more conservative, wait for the weekly trade triangle to kick in. If that kicks in, then just buy it anyway. But generally speaking, this is a sign on the candlestick charts that it's oversold. You've got basically a bullish engulfing line, and if it closes higher tomorrow on Biogen, the symbol is BIIB, like bib. If it closes higher tomorrow, then I think that confirms a low. So let's see what happens. But generally speaking, there's lots going on in the marketplace, and we certainly like to bring you up to date on that. And once again, if you are looking to improve your trading, and the easiest way to do it, in my opinion, is to have a personal one-on-one Market Club coach. I think they're really, really helpful. Give us a call. It's a free consultation. The call is free. 877-219-1482. Hey, this is Adam Hewison. I feel for the first time in a week alive because of the time difference from my recent trip to New Zealand. But some great markets. There's been some great opportunities to make money in the second half of the year. So let's get serious and follow those trade triangles. Have a great trading day.